Here's the Elliott wave forecast for November 12th, 2013 on the S&P 10-day 1-minute chart. Essentially, what this zigzag could be in S&P ABC, um, zigzag slash flat ABC, this could be the 2 before the 3. And 2 before the 3 of 3. Essentially, 2 of 3, 3 of 3. We could be right on the edge of a very large end of year rally. And the fact that we didn't correct that bad today on light volume is a really good sign. This is what I consider right here as a corrective 2. It may not be enough. It may not be deep enough to be a 2, but I've seen many shallow 2s this year, like big spike and then a sideways small, like almost non-existent 2, and then that turns to a 3. So the worst case though, we do test that. We just dropped like crazy down to like 1758 and then rallied the third wave. But at this point, I don't really see that happening. So if we do gap up above 1774, it's a big one. It'll set up the year-end 3 of 3 with my year-end target of 2000, 1940 to 2000, as high as 2000 by the end of the year. I know I have like 6 weeks, but as you guys know, November, December are the best 2 months of the entire year. Always. Always, always, always. There are times when it's not, but based on like I think it was the Trader's Digest, going back like since the 20s, November, December are the 2 best months for stocks, and basically November is the ground level, and then December is like the one that gets really crazy because the reason why November, December are always crazy is because of the year-end window dressing, and there's a lot of stuff to be window dressed right now. I'm talking like there's a lot of stuff you can select from to window dress its entire market and to show really good performance, or say that you owned it at the end of the year and then sell at the beginning of the year. So I think the market is ripe for that type of move. And a 3 of 3 here would be consistent with what I'm thinking about. For the Dow, this is more like ABC flat into a 3 of 3. Again, is the fact that we didn't drop like crazy today after this parabolic move off the 50,590 low, and that we actually came close to breaking 1.00. I know it's going to break 1.00 eventually this week, and then turn to a 3 of 3. It could be a grinding variety, a gap variety, I don't know. But I'm guessing it might be a grinder or a very slow move up until the end of the year, followed by gaps. For NASDAQ, ABC, perfect ABC, right down to the 38.55 level, followed by a rally. NASDAQ, though, needs to take out at least 39.25 / 39.37 to set up an upward 3. And I believe, based on this formation, that could easily happen. The fact that S&P and Dow are near the all-time highs would help push the NASDAQ a lot higher into the end of the year. Current position are UPRO, which I paid 83.67 for. I'm up about 70 cents on that. 60 to 70 cents on that. TQQQ, I'm down about $2.70 or $2.80, which isn't that bad considering the fact that I was actually down like almost $23,000 at one point, and the fact that I was able to handle that kind of pain and recognize the fact that we zigzagged in S&P to my level, and recognize that we were going to rally and retrace everything, which I stated in the pre-market before this actually happened, is why I'm still long, and I still believe that the 3 of 3 end of the year would be a really big boon for the market and for my positions. That's a wrap.